everyone. Welcome back to another edition of our weekend market analysis series. In this video, we are diving back into the XAUUSD market, ready to tackle the new month ahead. Remember that the price of gold took a tumble during the first half of the previous week, only to make a rebound during the second half of the week, recovering its losses and closing where the week started. As you can see on your screen right now, this was the trading setup we were looking at prior to the beginning of last week. And of course, we saw how the market broke down both the support line of the ascending channel we identified, and of course, the key level at the $2,320 area, inciting our first selling opportunity for the week. And of course, we rode this momentum all the way down. And of course, during the second half, we also had the privilege of capitalizing on the buy position above the 2302 level back into the structure that was broken. You can find a more detailed breakdown of each of our entry points in the description box below. Now, with the way things are going right now, I am of the opinion that gold's recovery was supported by various factors behind the scenes, including a decline in the US Treasury bond yield, a significant low US GDP reading, which came in last week, and of course, the hopes that the Federal Reserve might cut interest rates by September and again in the month of December, all thanks to the recent inflation data, which showed no increase from the month of April to May. And as a result of this development, we can see that the CME FedWatch tool now shows a whooping 89% chance of Federal Reserve cutting interest rates in September. This is a significant jump from the 64% probability before the inflation data, as you will see right here on the CME FedWatch tool. And as market participants digest the implication of the recent US economy data, the path of least resistance for gold appears bullish. But we can't ignore the bearish potential either, especially with a week packed with high impactful events on the US economic calendar. So, how are we going to plan for the upcoming week? As always, we will be leveraging our basic tools, the economic calendar, trend lines, key levels, and chart patterns to gain deeper insights into the market's potential response to this changing dynamic. But before we jump into the details, remember that this presentation is designed basically for educational purposes only. Forex trading carries inherent risk, so proceed with caution and seek advice from professional financial advisors before making any investment decisions. With that said, let's dive right into the business. So, the first thing we are going to be doing is to run through the daily time frame where we want to have an holistic perspective into what has been going on in this market. And for those of you who have been with me for a while on this asset, you will be familiar with this current structure we are looking at. Now, what we did here was to take into consideration the character of price action since the month of June of last year. So we are looking at an historical data of about a year, uh, 12 months or 13 months thereabout, and it's obvious that the market has been very bullish. Now, to further emphasize the strength of the bias here, we have a couple of ascending trend line which has been supporting this bullish idea. As you will see, we have one right here, and I have the second one right here. Now, this first one was broken at the mid-month of March, as you will see right here. And since price broke out of the structure about 3 to 4 months ago, price action had remained above that area. And from a theoretical standpoint, whenever price action breaks out of a structure like this, we expect that some point in time price may come back, retest the structure in an attempt to continue the uptrend move. Now, look at what has been going on here. Let me zoom in so we can see things clearly. So, look at what has been going on here in the last 3 to 4 weeks. You will see as soon as price cut back into this area, we begin to notice buy pressure resume again around this area. Now, another structure that you will notice on this chart, if you look at this appropriately, is a potential uptrend continuation pattern. So, if we consider this impulsive move all the way here, you will see that price action appeared to have transitioned into what may look like a um, flag pattern, pennant, or a bullish rectangle pattern, depending on which perspective you are looking at this from. But this is simply an uptrend continuation structure where we are going to be looking at a breakout of the resistance line here to give us a good signal to join the uptrend move. Now, to guide our trading decisions for this week, we want to have a key level marked out. And of course, I was able to spot something right around the 2330, a level which has been serving as a has played a key role in determining the direction of price action since the beginning of the month of April. Now, what we are going to be doing here is to watch and see if the market will break out of our key level or maintain selling pressure below this structure. You know how we use our key levels in this community, of course. We want to see, we want to look out for patterns and structures that support the idea of buying if price action remains above our key level, and of course, we look out for selling opportunities only if price breaks down our key level. So you would agree with me that we are at a crucial juncture right now where price is back into the 2330, our key level for next week, where the question now is, will the momentum continue to the upside, or are we going to see selling pressure persist below the structure to incite a sell-off, maybe back into this second ascending trend line? Now, to navigate this current market dynamics here, I have a simple trading setup we are going to be using to guide our decisions on the 4 hours time frame. Now, before we scale down into the 4 hours time frame, it is important that we keep tabs with the fundamental factors that will be influencing the sentiment in the market this week. And by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable timing to position ourselves for the next move. Now, based on this asset we are looking at, we are going to be focusing on high impactful event from the United States economic docket. And the first event we are going to be looking at this week is on Monday, July 1st, and that is the ISM manufacturing PMI, which is considered to be a leading economic indicator in the United States, measuring the health of the manufacturing sector by surveying purchasing managers on various business activities. Then on Tuesday, July 2nd, we will be looking forward to the Fed chairman's speech. In fact, this is one speech that everyone in the market will be looking forward to, as it holds considerable influence over the financial market. Of course, his remarks on Tuesday will provide insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. Then on Wednesday, July 3rd, we are going to be looking at the ADP employment change, which is a labor oriented data, a monthly economic report that provides an estimate of the change in non farm private employment in the United States. Then on that same day, we are going to be looking at the ISM Services PMI, which measures the performance and expectations of the services sector in the United States. Then on Friday, July 5, we're going to be looking at two labor oriented data, one of which is the average hourly earnings, which represents the average amount earned per hour by private sector employees in the United States. And in fact, it is considered to be a crucial labor market indicator. Then finally on Friday, we will be looking at the almighty non-farm payroll, another very important event for for the week, which is a key economic indicator that measures the number of jobs added or lost in the US economy. And of course, this excludes the farming sector, government employees, private household employees, and non-profit organization employees. So these are the high impactful event we are going to be looking forward to. And of course, it's going to be playing a major role in influencing the sentiment in the market, which will reflect on the chart as price action. Now, talking about price action, we scaled down into the 4 hours time frame where I do have a simple setup to navigate that confluence we identified on the daily time frame. Now, right here on the 4 hours time frame, after considering the character of price action since the mid-month of May, that's about 7 to 8 weeks of historical data. This is what I was able to come up with. Now, the first thing you would notice here is the fact that price action had consistently and uniformly found lower highs, which has resulted in this descending trend line you see on your screen right now. Now, whenever we identify a descending trend line, it is a sign that sellers are gaining momentum. However, if you look at the structure closely, despite the series of lower highs in the last 4 to 5 weeks, price is yet to find a lower low. As you will see here, every attempt by sellers to find a lower low was negated by buyers around this 2,300 and $2,286 zone, giving us a robust demand zone to work with. And of course, this buying traction around this area had led to the breakout of the first descending trend line here, as you will see, multiple retests of the structure as buyers continue to gain traction. Now, with the situation we have here, it makes a lot of sense that we continue to look out for buying opportunity as long as price remains above this demand zone. So, with our key level right here at the 2330, sharing a beautiful confluence with this descending trend line here, a temporary descending trend line, I would like to see price break out of these structures to give me a good opportunity to continue the uptrend move. And of course, look out for more buying opportunities at the breakout of the 2375 area. However, if price does not break out of the structure and we continue to see selling pressure right below the 2330, remember what happened here. There is this ascending trend line I spotted here. This was the support line of the ascending channel we saw during last week trading session. You can check my last video to have an insight into the structure. And we saw how the market broke down the structure last week, coming back to retest the structure. So, are we going to see sellers maintain their momentum where continued selling pressure below the structure could give us a good confirmation to join the decline and a further breakdown of that demand zone, welcoming more selling opportunity? So, you see, we are at a crucial juncture in this market where, depending on how market participant reacts to this confluence around our key level at the beginning of the week will guide our decisions, our decision making. Trust me, I will be with you in the comment section of both my on all of my on in the comment section of this video to give you an update on what I think will happen after monitoring the character of price action around this area during the early hours of the week. If you have found this content helpful and useful in making your independent trading decision for the week, I will greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.